Okay, so welcome back. Now we were discussing about this foreign payment, and we have discussed some steps in foreign remittance, that what you need to follow uh, before making a foreign remittance. We have discussed about the document what you need and the steps which you have to follow before making a foreign payment. Okay, sorry. So there are two more things which basically we have discussed, that first of all you need invoice and agreement, then you need approval from the department, then you need following documents for a 15 cb, then you will get the 15 cb, and then after getting the 15 cb you have to prepare a 15 ca. Now how will you prepare a 15 ca? It is a separate process which needs to be taken into consideration, because you need login ID and password of income tax department of that company, and from where you can go and generate that 15 CA. So it is a separate process. If you want to know about it, you can Google it. There's no problem in that. It is the details will be filled based upon the 15 CB which you have received. So after receiving 15 CB, you have to prepare 15 CA, and then you have to prepare that letter and send all the documents to bank for making the payment. This was the complete process, step by step. Okay, now moving on to the accounting of this foreign remittance. This is a little bit lengthy, I would say, and you have to keep in mind a lot of things, because it is not only just one single entry. There are a lot of things impacting a foreign remittance, so the accounting becomes a little bit complicated. Okay, so we will discuss two examples here, so as to make you comfortable. But these are the six steps, I would say. Just remind, or you can say remember these 6 points whenever you're making a whenever you're accounting for a foreign remittance transaction, so that all the aspects will be covered, and you'll not forget anything, and accounting will be proper and smooth. Okay, these 6 points are very important. Now what are these? Number one is TDS. So TDS is written over in form 15 CB, how much you have to deduct. So first of all, you have to go and check form 15 CB and see whether there is TDS to be deducted or not. Number two, you have to see whether grossing up needs to be done. Now, what is grossing up? See, grossing up means, supposingly there is a foreign company, let's say Facebook, they want $5,000 for creating ads for you, or spreading ads for you. Now, these $5,000, Facebook will not accept $4,995. Even a $5 deduction, they will not accept until and unless you make the payment complete full online. And this happens because there's nobody in front whom you can discuss or do anything. These are just websites. You have to go and make the payment through a credit card, debit card, or whatever, and then only you can proceed with your ads. So there is no one whom you can discuss, but your sales team needs to process these ads, or project these ads all over throughout wherever they want to. So in that case, and the chartered accountant says in form 15 CB that these ads are taxable, and you have to deduct some tax. Now how will you deduct? Because you are making 5,000 payment to Facebook, and of course without making full payment, website will not move forward. So you have to make full $5,000 payment. CA there sitting says this transaction is taxable and you have to deduct tax, let's say 10%. Then what happened in this case? Now how will you make the payment? So what we do is we make the full payment of $5,000, and that is the cost which is recorded in our books of accounts. That is, of course, it will be recorded. But over and above that, the 5% amount, or let's say the 10% of tax amount which CA says that we have to pay, that we will pay out of our pocket, right? So that will be an additional cost to the company. So that additional cost calculation is called grossing up. Okay, we will tell you how to gross up an amount, how to do a transaction, because in most of the foreign transaction, grossing up is done. They don't accept any deducted payment. You have to make the tax payment out of your pocket if you want to take this service. It's simple as that. Okay, so this is what grossing up. Okay, then third is you have to check whether the transaction is prepaid or not, because I told you in the beginning that the companies are doing closing their books of accounts on a monthly basis. So you have to bifurcate. If in a particular month, let's say we are closing September month, or we are in the mid of September month, so we will close September 2019. So in that mid of that month, if I'm booking an invoice, I have to see whether I am paying this invoice or booking this invoice for the whole year. If yes, then I have to break it down into two parts. What is the expense part? What is the prepaid part? Because in the if I'm sitting in the month of September and I'm paying it till the March, then the portion from October to March is a prepaid expense. It is not a expense for the current month. Since we are closing books for the current month, this is very important, and you will see that you have to account for this on a monthly close basis. But if you're closing books on a yearly basis, it doesn't matter. You can account for full expense in one go. But this matters when the company is doing it on a monthly closing, or they're closing their P&L on a monthly basis. And this is what most of the corporates are doing right now. Okay. So third point, you need to check whether it is prepaid or not. Fourth, you have to apply reverse charge mechanism under GST. Now we have discussed in the previous lectures what is reverse charge mechanism, why it is applied, and there also we have told you that whenever the foreign payment is made, reverse charge is automatically applicable, and it is at a standard rate of 18%, 9% CGST, 9% HGST. Simple as that. So reverse charge is automatically applicable on all the foreign transactions. Okay. Okay. Now, moving on to fifth point, matching the payment with net invoice value. Now, what is the net invoice value? Or okay, let us take the 5 and 6 point along with the example, because I think you will better understand how to reconcile that all the accounting entries what you have done, whether they are correct or not. There is a reconciliation process. Okay, so 5 and 6 point we will discuss after discussing our example in the next lecture. Okay, till then.